Okay, the next pair on our list for the 4 majors this morning, the 15th of February 2011, is the US dollar against Swiss franc. On our CTC strategy template, 6 time frames. We'll have a look at the daily first, and then we'll start looking at the intraday. Okay, what do you see straight away? I see previous support, resistance, resistance. And what is the pair doing now? It's failed to capitalize yet again around this area, and it's fallen back yesterday. And what happens is the Asian market is now, in the European session open, we've only seen it creeping just to the underside of the bottom end of this candle. Ideally, if you want to see another reattempt of further highs, then we need to see the pair staying above this level. Excuse me, guys, got a huge toad stuck in my throat. But yeah, if we could see the pair staying above this area here at 0.969, and then we could see a reattempt of this high just below the 975 mark. If I can just zoom back out again, so we know straight away that we have some resistance levels on this pair on a daily time frame to be aware of. The major trend is still down. Okay, you can see we've come from a very, very high point we saw last June, and we're trading in the bottom end. But the one thing to notice is, I mean, you could take it from here and you could draw it through, but we are trading above this major trend. Okay, whether you're looking at it from this angle, you're drawing it, you could do it through that way, we're still trading above the trend line, major trend line. Okay, so this could be where we should be looking for a potential bounce to occur. Anyway, regardless if it's in this area here, you'll notice those highs over there, for example, are still going to come into play here from this previous high, which happened to be there, which is that, which is that. So anywhere within that area there, 9657-ish, anywhere in this area, we could see a potential bounce at the upside. CTC is blue, and when I mentioned this to you yesterday, the longer we stay on this side, there's definitely a possibility of the entire CTC strategy going in our favor, and then we could profit to the upside. However, 9750 needs to be breached. To break above this, then we're looking at 990 and all the way up here, guys. There's a lot of nice movement, a lot of air, clean air to trade above this area. Okay, even to the 1000 mark. So clean air in this area, but we need to be trading above 9750. Okay, so intraday, we should be looking for a possibility of consolidation to occur with further upside movement. Okay, if it fails to do that, then we could see other parts along that route being targeted. Okay, so we look at the 30-minute chart, for example. You can see that 968 is a previous resistance and support area, and we're seeing a lot of support during the Asian market trading session. It's gone sideways, and what you do see is we've had an all-time high and price has been moving to the downside. Okay, so got to be trading above all this. You'll notice that there's a previous support and resistance area at 9715, so we've got to be trading above the trend line, this intermediate trend line, plus this previous support line here, 9715, which is resistance, to even see further extensions to the upside. Okay, and below us we have a 20-period moving average and previous support. So we're in this bandwidth now where we could see a correction, and we could see an opportunity to scalp some points to the downside. If we have a break higher than this, then we could see a rally to 955, close below 968. You could see further downside movement, and we should be looking at roughly 964 to start with, or even there at 965, sorry, apologies, and then 964-ish, and then ultimately right down here at 953. Okay, I'll be back to the US dollar against Japanese.